It's incredible because 99% of traders will eventually fail. The more systematic you make things, the easier it is, or the harder it is to screw up. What strategies actually work for regular people, not people with a very specific operational budget of $100,000, but for the everyday folk.
We have had a chance to try quite a few of them, and we're starting to get some pretty good insights. Lumi Wealth is a company where we basically teach people how to build trading algorithms, right? So we have a really good group of people that are building really amazing stuff. Cool. You want me to kick it off?
Let's do it.
All right. Let's do it. Awesome. Okay, great. Well, welcome, Raul. It's fantastic that you're here right now. We are starting a brand new podcast together, and this is the first of many episodes. I guess before we introduce ourselves and all that kind of stuff, today's topic is going to be investment strategies that actually make money. I think we have two people here that could talk about that. You know, we've been building a lot of trading algorithms over time. You're running a hedge fund right now. So I think we have some good topics to talk about. But before we get into that, Raul, do you want to introduce yourself, tell the audience a little bit about yourself, your background, what you're working on?
Yeah, definitely. Hey everyone, I'm Raul from South Florida. I come from the aviation industry, but sometimes life, throws curveballs at you. And it was actually 2017 when a friend told me about Ethereum, and that kind of, I fell down the rabbit hole shortly after that. And I started very focused on trading at the beginning, 2018. But ever since there, it's really been more of taking the educational approach to the crypto market, first to understand it from a technology side, then from what strategies, as the topic says, what strategies actually work for regular people, not, people with a very specific operational budget of $100,000, but for the everyday folk. And yeah, really crypto or the technologies behind these digital assets have been a passion of mine, because from a societal aspect, I think it's something that actually helps people become more independent. And it's been something that I even feel I have a need to protect and to propagate. So I'm super excited to be talking about investing, talking about crypto, and working in the space because, it's where my heart's at.
Awesome. Very cool. I love the passion. It's awesome. It definitely shows. Cool. Let me say a little bit about kind of my background and what we're working on. I guess you're from South Florida. I was born in Canada, in Toronto, as we say it in Canada. Yeah, freezing cold outside. Although we do travel quite a bit. I mean, I do the snowbird thing. I hate the cold, so I'm usually down south in the winter. I've been down south every year for 5 years, except for last year because we had a baby boy. Who's 4 months old now, but I think, thank you. Yeah, it's nice. You do the investing thing, you run your own business, you could travel a lot more. We definitely have the cash to do basically whatever the hell we want. So it's nice. So that's kind of where I was born, where I came from. But for me, I've always been a software guy, right? I learned how to code when I was like 12 years old. I've been doing it my whole life. I actually don't even remember not being able to code. Ran a lot of software teams, who ran a lot of startups. But, in doing all the software stuff, what I really started to realize I have a huge passion for is finance, right? I learned this when I went through business school, because I didn't want to go to school for computer science because I've already done that. Like I was already very good at it. By the time that college came around, I knew more than some of my professors. It was crazy. It's kind of ridiculous, actually. I guess that's what happens when you do this like your whole life. But I decided instead to go to business school, right? And when I went to business school, is like, holy shit, finance is actually really, really good with software, right? Like when you apply software to the world of finance, theoretically, you could actually basically solve finance in a sense, right? Theoretically, if you have powerful enough computers, you can predict anything, right? Because that's finance, investing at least is all about prediction, right? You're making money in prediction. And that was kind of the idea back in the day. Went to school, did my master's in finance, started a startup, sold it. We made some money off that. And then I went to go work for a bunch of companies on Wall Street, and basically same sort of thing. Software is just doing a really, really good job in fintech. I was thinking, you know what, we should start our own kind of business doing this. And that's what we're doing now. We're doing Lumi Wealth is a company where we basically teach people how to build trading algorithms, right? So we have a really good group of people that are building really amazing stuff. We have people that are ex-Google employees. We have people that are like Goldman Sachs employees. We have people that investment bankers, hedge fund managers, like all sorts of crazy stuff. We have like an incredible group of people that is just constantly innovating and creating new algorithms. So that's what we do. We have some pretty cool stuff available that if you guys want to see it, lumiwealth.com. But I think this would be a very interesting conversation talking about strategies to actually make money, because we have had a chance to try quite a few of them, and we're starting to get some pretty good insights. So I think this would be a great discussion. But cool. Do you want to start off? What do you think are investment strategies that actually make money, or what have you been doing, and how have you been actually making a profit trading this stuff other than just buying Bitcoin and hodling forever, you know?
Totally. It's incredible because I'm not so accurate on the numbers, but 99% of traders will eventually fail. You know, whether it's in the first couple months, they tried for 2 years and then eventually they had a bad, losing streak. But whether it's 95 or 99% of traders eventually fail. And I think
there's actually a stat that I know of that's a hard number. I think it's most investors make 3% a year on average, which is crazy. Wow. If you think about the stock market, does 10% without you doing anything. Yeah.
We just can't stop getting in our own way, right? Mm-hmm. And that's why, it's incredible that since the beginning, you found the passion for that bridge between finance and software, because the more systematic you make things, the easier it is, or the harder it is to screw up, said in other ways. Mm-hmm. And that's why I love your business. I love what you do, because helping people create, these systematic approaches to trading, to investing, makes it so much easier. I've shot myself in the foot more times than I can count in trading and investing. So my approach is really, how can I, I'm not so much on your side, building these algorithms, but I keep things as simple as they can be. So for me, I take the debt approach or the liquidity provision approach, providing liquidity to things, whether it's in debt, mostly debt, or just places that are low on liquidity and people are maybe using it to get in positions, out of positions, and those trading fees will give me a stable return. So a little bit different approach, but that's what I found to work for me, because I'm just not the best trader.
Well, you don't have to be. People like, every time I tell people what I do, it's like immediately they're like start going into like indicators and like win rates and stuff like that. I'm like, you realize that's like one very specific way on how to make money, and actually a very difficult way to make money, because it's so crowded. There's so many people doing it. I actually very much agree with you. Like if you want to actually find an edge and do something that is going to make more money than the average person, you got to do something that the average person does not do, right? And the average person goes on TradingView and sets up a million different trading signals, back test, and think that they're going to make $1 bajillion. It's like, well, there's hindsight bias. There's a bunch of stuff you got to pay attention to, right? But that's the rookie mistakes I find always, right? So what do you guys do? So you're running a hedge fund now, right? So I guess you're planning to implement these types of models. So what, like, without giving away the secret sauce, like what are some of the approaches that you're doing more specifically?
So right now, for the biggest opportunity that we see in the market for us, we are crypto natives by heart. We are actually fanatics. And are you familiar? So you know about Ethereum, and you know that there's tokens that live on Ethereum, right? That are registered.
ERC-20 kind of thing.
ERC-20, exactly. And then another type of token, ERC-20 represents everything that's fungible. So everything that looks like the US dollar that is 1-to-1 equal, everything that looks like currencies, like stocks, these coins, etc. And then you have another token standard called the ERC 721. And these are where the NFTs fall under, the unique tokens, where one is different than the other, similar as one apartment is not the same as the apartment next to it, even though they're very similar, they're completely different. So this is a corner of the market that now many people, at least in the crypto space, are paying attention to. And still it represents an asset class that is a lot bigger to where it is right now. Right now, the NFT market on Ethereum is only 5% of its fungible counterpart. So we have ERC20s right now, maybe about $400 billion, and even less. And the NFT market on Ethereum is only $10 billion. So we took a blue ocean approach, and we're going to be focused specifically on debt for the NFT market.
Debt for the NFT market. That's interesting.
Right now, okay. Yeah, right now it's a very early stage market. It had its first boom and bust cycle, akin to 2014 for Bitcoin, when it was just getting the discovery phase of it. But we're seeing a ecosystem of financial products start to be built around the ERC 721 standard. So I envision...
I guess it's like people that are turning houses into NFTs or cars. I've heard that's a very big market. Is that kind of what you're talking about?
That is exactly what I'm talking about, but that is the end game of NFTs. It's going to take a while before we can bridge, because I might have a token representing a house, but what if the house burns down? It has to have a 1-to-1 representation. And for that, not only do you need 24/7 a kind of oracle that live streams like the health of the house and everything with an undisputable middleman, but you also need the regulators to get on board and everything else. And it's just, there's various experiments. NFTs and real estate is something that I love and I'm always interested in, but there's about 10 to 25 experiments happening: Mexico, United States, Canada, Europe. And we're still waiting to see, what works, what doesn't, what the regulators like and what they don't. But what's interesting for us, or what we're focusing on, is things that are 100% digital, that no matter what happens in the physical world, the asset remains, so some people get scared because it's 100% digital, but digital isn't real. But for us, that actually decreases a lot of the risk, because there's no counterparty risk, there's no execution risk, and the only kind of tail risk is Ethereum itself. What if Ethereum goes down? But that's obviously a huge problem. Anything is possible in this world. But we find that they're, kind of like a piece of art, but that you can't really destroy.
Interesting. So that's like the artwork, like that sort of thing. Okay.
That's how it starts. That's how this market has been starting, but right. It's just beginning. Exactly.
Yeah.
And we're going to be focused on liquidity provisioning, on debt for this tiny market, $10 billion, which is the NFT market.
So, okay. So it is NFTs, like what we've talked about, or what most people think of it as NFTs. So tell me then, how are you doing debt on this? How do you even do that? How does that work? And
yeah. So Ethereum it's very similar to a shopping mall, actually. Ethereum is a shopping mall with a bunch of different stores and everything. But all the transactions are automated. Someone develops some code, deploys it onto Ethereum, and that's what they call a smart contract. It's almost like a vending machine. So imagine a mall with a bunch of different types of vending machines. And every time that someone uses a vending machine, Ethereum gets paid. One, they have to use, an Ethereum asset. And two, a portion of that, goes to the mall itself. So for the past 2 years, ever since the NFT token standard, ERC 721, has been gaining traction, a bunch of different people have been building businesses around that token standard. So right now there's maybe, for lending in specific, there's maybe 10 different applications, or said another way, businesses, or said another way, protocols, where someone with an NFT holder, maybe worth $50,000, can come in, put it on the market. Hey, everyone, this is mine. I'm going to put it here, register it on the application. I'm looking for $15,000. And then lenders with capital can come in and start putting offers. Hey, I'll give you $15,000 for 30 days at 25 APR. Hey, I'll give you $20,000 for 60 days at 40 APR. Everyone can get offers, in a 24/7 global market, which is incredible. And yeah, so these are spread across applications and across users. But the counterparty risk, again, the only thing is Ethereum and the smart contracts, but you can verify, audit those, make sure they're pretty bulletproof. And yeah, that's what we're focused on.
Okay, interesting. So let's say if I want to do lending on this, what's like an example of a website that I can go to actually click a button and do this?
Yeah. So one that we really like is called Arcade.
Arcade. AR, like
Arcade.xyz.
Arcade.xyz. I'm doing this. Well, there's search right now. Let me, I could share my screen here so people can actually see what we are talking about. Let me put this on another screen. So I'm going to share screen, and I'm going to share the entire screen on this one. So is this it?
Correct.
Next level finance. I go into here, loan volume, outstanding debt. Okay, I see. And then you go into here. Oh, they have the real world assets too. They have gaming, collectibles, art. I guess you're focused on the art part, right?
We're focused on all of that, really. But art is where the heart is. No, it's just art has a lot lower risk than, for example, gaming assets.
Right. And why do you think that is? Oh yeah, I guess you're saying the counterparty risk and that sort of thing, right?
Counterparty risk and execution risk. So, they could be some amazing gaming assets worth a lot of money, part of a huge ecosystem. But let's say the company decides to completely change their roadmap tomorrow. The decision from one person, say the founder, CEO, or the team, can affect, our lending book drastically. And that's what we're not looking for,
Right. Okay, so I'm here, so I'm looking at this one. These are pretty high APRs, 20%, 12, 35, this one's 40. Was it sushi? NFTs always make me laugh a little bit. But, okay, so say we go into this one, and then we could create an offer. And this is now collateral for the loan?
Exactly.
Okay.
So down there where you see open offers, that's a bunch of other lenders, giving of the examples that I just talked about, different APRs, different durations, and different principal amounts. Mm-hmm. Eventually, the borrower will choose, an offer, immediately get the money, and their NFT is locked in a smart contract. So I love the crypto space.
I see. So that's why you're saying there's less counterparty risk, because this thing is actually locked up, and like they can't just walk away with it, right? Like if it's a car, it's locked up in digital space, but you could still smash the car into a wall, right? It'll be fine, or set your house on fire or whatever.
Exactly.
Okay. Thing. That's pretty cool.
I love crypto because it's, taking money as a concept and experimenting with it as many ways as possible. And I participate in some crazy experiments, but there's a lot of different angles of where things can go wrong with all these experiments. This is a very simple transaction where it's just one contract. The NFT gets locked in there, and if they don't pay back, we're keeping the NFT and immediately going out and selling it. And there's not really much they can do. There's not really much a hacker can do. It's really bulletproof and really simplified to where from an execution side, we see much less risk and we can build a solid strategy around it as long as we have a good deal flow, for these NFTs.
Interesting. That sounds very cool. I didn't even know this was possible. This is very interesting trading strategy or investment strategy, I should say. Cool. Okay. And this is what basically.
Exactly. Our first fund is focused 100% on the Ethereum ecosystem and 100% just lending out to high valued NFTs.
Cool. Awesome. I like it. I think it's a very cool idea. Maybe I'll give you some cash.
I would love to talk further whenever you want. And open up a new tab and open up. Let me just find the link. Wasabi. Yeah. Wasabi.xyz.
This is another one like this.
So this is no. There's a bunch of, lending protocols, but what they actually did is they made a system for perpetual futures against the price of NFTs. And they're not just trading on an oracle price, on the price on one exchange. They actually they fractionalized these NFTs so that when you trade these things, you're actually buying very small portions of the NFT. And you could leverage long, you could leverage short by borrowing, fractionalized versions of these NFTs. And you could trade the market, or you can even hedge your downside. If you have exposure for some reason and you want to leverage short to cover your downside.
This like team yourself that way, right?
Exactly.
Okay. Interesting.
And this is just the beginning. Me and my partner, my team, we think the ERC 721 standard, which pretty much is another way of saying NFTs on Ethereum, is going to become a $200 billion asset class. This, a lot of it looks like, it's just playful cartoons. It looks like games. And that's because it kind of is, everything at the beginning, it kind of looks like a toy. But we think this is actually
general, when crypto was first a thing, what was it? Kraken. I went to their website. I was like, this is a joke, right? Like, you want me to put money into this? What are you talking about? Meanwhile, now they're like multi-billion-dollar company, So
yeah.
Things change. Definitely. I agree. Yeah. Cool. Very interesting. Okay. Well, I've learned something new today. I think this is very cool. So arcade.xyz, if people want to reach out to you and they want to talk to you about any of this stuff, how would they reach out to you?
Yeah. So we're very active on Twitter, and my personal Twitter profile is green 4_ and the letter I.
Let me see if I can find that here. Green
4_.
4_ and the letter Y.
I.
Let me move this over. I've got another tab. Green I.
You should find a picture of a penguin somewhere.
Okay. Am I spelling this right? 1, 2, 3, 4_.
Go all the way to the bottom.
Is that you?
There I am.
Well, I'm going to follow you too, actually. There you go. Cool. All right. Well, if you guys are interested in any of this stuff, you want to learn more about it, reach out to Raul here on Twitter and or x.com, I guess now. I still can't get over calling it Twitter. I still call it Twitter. I don't know if you did.
I still call it Twitter. It'll forever be Twitter for me.
X is just such a weird name. Like it's a letter. It's not a name, you know? Like, anyway.
He was trying to make it cool and, a cool app.
Well, he started x.com back in the day, right? So I think he just like revived it. Like he still owned it. Or
yeah. Yeah. But yeah, if anyone wants to talk crypto, tokens, NFTs, or anything in that space, I'm more than happy to chit chat, to have a laugh, and explore any new ideas that are coming up.
Awesome. Very cool. Great. Cool. All right. So we're 25 minutes into this. I think maybe it's a good time for us to call it. I thought this was a very interesting discussion. Arcade.xyz, wasabi.xyz. For some reason, everything's XYZ. And then Green Eye on.
It's the new .com.
Yeah, it seems like it. Yeah, at least for crypto. Cool. Awesome. All right. Well, it's been a pleasure talking. And I'll see you on the next episode.
See you guys. Thank you.